Shannon, I begin with you because you have made some very interesting moves in your portfolio, both what you have trimmed and what you have added to. First, to what you have trimmed. Apple and Microsoft. Tell me why.
So really two different stories here, Scott. First of all, I'll start with Microsoft. As I've talked about on the show, this is our largest holding and remains very high conviction for us. We still have a lot of confidence in Azure and the end-to-end software integrations that Microsoft offers, but this is a huge overweight for us. And from a portfolio construction standpoint, it was time to trim. Apple, on the other hand, we've seen a significant run-up, 75% in the last year, and we really feel like a lot of that has come on multiple expansion. We've gone from about 15 times to about 27 times, and although we do believe in the services story and the monetization of that base as it relates to all of us who hold those iPhones in our hands every day, we do think that over the course of the next year or so that there are probably better opportunities. And so we've trimmed our Apple position back from a market weight to an underweight. We're going to continue to hold the stock and maybe look for opportunities to add back to it. But at this point in time, we think that there are better opportunities in the market.
Wow. I mean, that's a big call, big commentary around Apple. Let's be honest, though. A lot of those stocks, Shannon, in that universe, the FANGs, are multiple expansion stories, but you're singling out Apple for the one that you've decided to trim from and take your exposure down.
Well, I think we're in the midst of this upgrade cycle, right? And I think that there has been some enthusiasm ahead of the upgrade to the newest iPhone, away from the 6 and into the 12. And so I think that there is some runway here from a hardware perspective. I just think that there's a lot of owners of this stock who are looking at it in terms of, is this the stock I want to go into 2021 with economic momentum in the back half of the year, with a lot of this cyclical rotation that we're going to, I'm sure, talk about today as we have over the last couple of months. And I just think that in looking at where I want to place my bets, I think that it probably makes sense to just pull back a little bit here. Again, there might be an opportunity to add to this position, and if we see services continue to grow in importance, then, that might be that time. But I think this is where we think you can take a little bit of money off the table in some of these FANG stocks and get some other opportunities.
Okay, so we'll get to everybody in a second. But, Shannon, I continue with you for a moment because you added to small caps, you added to international, and you added to emerging markets. This sort of reminds me of what Josh was saying yesterday, how the FANGs have taken this pause and these other areas of the market have started to really do well. Energy, financials, travel, the Russell, emerging markets. Is that the play that you're trying to make as well?
To some extent. I want to caution, I don't believe that you need to make a full-scale rotation out of the names that have done well, some of which are some of these growth names that we're talking about here, to a completely cyclical portfolio. What I do think, and one of the things that we've talked about, and Josh has talked about this, and Joe's talked a lot about this, is that we need this breadth, this broadening out of equities to occur in order for gains to be sustainable into next year. And what you need to do is you need to see money coming from places that have done well, investment-grade bonds, cash, gold, into equities. And so we think that that makes sense to add to other asset classes outside of U.S. large cap, small caps, emerging markets, international, because the valuations are attractive there. And so for me, adding risk to my portfolio, I can still hang on to some of these positions, still going to hold Apple, still going to hold Microsoft, but I can add that cyclical exposure in other places without necessarily having to make a binary call on whether I think United Airlines is going to go up another 50%. So that's how we look at it from a portfolio perspective. I think there's opportunities here for investors, particularly if they've only been in large caps. There are other places that you can put your money that have more cyclical exposure just because of the way those indexes are built.
Okay.